Hey everybody, so today was a crazy day. I didn't really make a video yesterday because I didn't feel like anything really happened yesterday. So today I'm going to cover a ton of technicals and we're going to start with Tesla. So if I'm looking at Tesla, I'm going to go on the 1 year time frame, which is basically the 1 day chart. And I'm going to take that off right here. So here's what I noticed on Tesla right away. So do you guys see this 20-day moving average? Look at where we hit today. We basically hit the 20-day moving average and we rejected, and essentially, this could just be another lower high. So we don't really know. But if we do rally a little bit more from here, then, I would say, the 762 area or possibly this 631 area could be a zone where we could sell off. So do watch out for that. But we did hit this 20-day moving average. So things do get a little bit risky from here. This could act as resistance, or we could just break through it. So if I'm looking at Tesla volume right now, volume did pick up right here, as you can see. And we're trading at 39.71 million shares traded today. Also notice that this line right here coincides with this low that we made on February. So in my opinion, this is probably a very strong resistance that we could see right here. So you can see right here and right there, and this 20-day moving average. So if we do get above this, I do think we could just see one quick move up right here, possibly to 765. But I mean, right now there is a lot of risk right here. Now moving on to SPY. So SPY is a little bit interesting. So we're gonna go on the 1 year time frame, the 1 day. So if I look right here, we bounced off this bottom trend line. So I was talking about this the other day that, hey, you know what? We could be bouncing off this bottom trend line. We've bounced off it plenty of times before, but this is getting more and more risky every single time we revisit this. Because one of these days, it's not going to catch. And a lot of bulls are going to get seriously screwed if they keep thinking that this is going to be the one that's constantly catching every one of these massive falls. I mean, that's what we thought back here with the 50-day moving average. So for the longest time, bulls were always constantly buying this dip at the 50-day moving average. And you can see how well it's held up. And then one day, it doesn't hold up. And then it becomes resistance. And then you can kind of see how the story plays out. So you don't want to constantly put all your faith in this one trend line. So if you ever do position yourself around these areas, don't position too heavy because all of those gains could just get decimated all in this one trade. So just looking where we are right now, I mean, we kind of drew an indecision candle. We have these wicks on the bottom and to the top. The body is in the middle. So right now, I mean, things don't look too good, but I am going to show you something interesting. When I flip to the weekly time frame, look at where we're at right now. We basically hit this top trend line, and this is acting as rejection right now, or resistance. So when I zoom out, you can kind of see the significance of this trend channel, and we're basically at the top of it right now. So now zooming back in, on the weekly time frame, we have this gap. And this gap basically takes us to 390. And it's not very often that we leave a gap on the weekly time frame. I want to make this very clear. And to show you, I'm going to look through history with you. So we're going to scroll back. Oops. Whatever, I'll fix that later. So we're going to scroll back. We're going to look at all the times where we left a gap on the weekly. Now look here. Even during the crash, the 2020 pandemic, we didn't leave a gap on the weekly. We filled every single gap. And that's impressive. How far do I have to go back here? Here's one. So this was 2016. In 2016, we left a gap right here, as you can see. So let's kind of see how big this gap is. Let's see. The top of this is like 181, or the bottom is 181. Top is about 182, so it's not really that big of a gap. Let's try and find another one here. I mean, you guys are seeing how far back I have to go just to find a gap on the weekly chart. And I feel like lately I've been talking a lot about statistics and how things are statistically not likely to happen, but they keep happening. So, I mean, this could just be another instance. Right here in 2008, we have another gap right here. See if I can find one more and then I'll call it quits. Oh yeah, that's basically one right there. It's a small one. 2001 right here. You know what? Let's just find one more for the heck of it. No, I guess that's it. But yeah, that's it for the gaps. Oh, maybe this one. Yep, right here. Another one in 2001. So yeah, that's essentially all the gaps that you see on the weekly time frame. So it really doesn't happen that often. But if we do fill that 290 area, there's still another gap right here that takes us all the way to these 401 levels. So as you can see, that's about 401.12. So there is still another gap above, but this one I'm not as sure if we can fill it. This weekly gap, I do feel like we could fill it, but if we do fill this, I think it's going to be very quick. Like it's going to be a super quick move up, and then we'll see what happens after that. Because if we go back and we look at the last FOMC meeting we had, that was I believe it was like May 4th. Let me go back and look at it. So let's see, May 4th. Yeah, it was this move right here. So I'm gonna have to go on a lower time frame to show you what exactly happened. So if I look right here, we had this massive rally on FOMC day, and then look what happened right after. So essentially what happened was that this rally just filled this gap area right here. So it went back to fill this. And then we completely just totally got decimated. So this entire move got reversed and then some. And then you can see what happened after that. And we're leaving this gap right here at 424. And we still haven't filled it. So this is a gap that who knows when will get filled. I mean, maybe on this next rally, but you know, that's just asking for too much here. So let's go to Apple. Now, I'm going to go on the weekly. Now on the weekly time frame, the gap did get filled, as you guys can see. So that was right around like 137-ish. So you can see it a little bit closer right here. Whoop, gap got filled. And we have a doji. So now we just have these wicks on the bottom and the top. We're not really sure if we want to go up higher from here. And just look at this resistance right here. I mean, there's some strong resistance at this 137 level. I could zoom out even further. And this was prior support. Prior support acting as resistance right here. We still have this gap that's right around 140. And it basically fills around 143-ish. So still a lot of resistance right here. But there is potential that we could fill this gap. I mean, it could always happen, but I don't know. I'm not feeling it too much. Now, Microsoft. Something important I want to point out on Microsoft. We have this downtrend support line. So it was acting as support plenty of times. Right here, right there, right there. Now, it's possibly acting as resistance. Look, we basically hit that and we rejected. We also filled this gap right here as well. So we don't have any gaps to fill except this one right here in the shorter term. So if we were to fill this gap, I mean, that's quite a big move. That's like 264.43. So to me, that's asking a little bit too much right now. We're going to need to see some pretty bullish news to get this one filled. So, you know, let's just take a look at where this could fall if things just go down from here. I would think right here at 235. As you can see, this was a small little gap that we had right there, and it was acting as support right there. And then below that, oh boy, things get ugly. Probably be around this area right here. I would say maybe like 205-ish. It's about like 206. So yeah, this little gap area right here and all of this support. So yeah, Microsoft has potential to fall quite a bit if we just reject right here. Now Google. Google's also interesting. Look at where we hit. We hit the 20-day moving average and we rejected. But we also filled this gap right here as well. And as you can see, we have this trend line right here. And we're basically rejecting right there as well. So this is looking pretty interesting. It just doesn't look too good from here, in all honesty. Now with XLF, a lot of people haven't been talking about this, but the financials have been getting absolutely decimated. Let me look at the weekly time frame for you guys. Look at that weekly candle. That is so ugly. And then look at this one right here. So it's been fading a ton. And essentially, you know, Jerome Powell and the Fed, they don't think we're going to get a recession, but XLF is basically telling us, hey, we're going to get a recession. Because you know what happens when we have a recession? A lot of bad debt. And that's probably the reason why XLF is fading so hard. So, mixed messages, that's for sure. Now we have this gap that we could fill right around 32.47. There's another bigger one up here. I don't think we're going to fill this, but we could. 33.70 right here. Now if we want to fill this weekly gap, then yeah, it's basically just that 32.50-ish area, and then it'll get filled. But we do have this resistance right here as well. Now the VIX is very interesting, and I'm going to show you guys why. So with the VIX, we had this pennant. We broke out of the pennant, made this massive gap. We filled that gap, and look where we fell to. We basically hit this 20-day moving average right here, and we bounced pretty darn hard. So this 20-day moving average is at 27.69. We closed at 29.62. So now, you know, this kind of begs the question, where are we going to go from here? Well, it's a little hard to say. I mean, I kind of get the feeling that we could cool off a little bit more. Maybe we go a little bit sideways. Who knows? But there is support. If we do break down these moving averages, there is going to be support again here on this trend line right here. So the VIX is pretty insulated in terms of support. So we got that 50, we got the 20, and we got the support trend line right down here. And then this can also act as support as well. Now, if we're looking at the dollar under 105 is gonna be a little bit more bullish for us. But when it does get over 105, then things get a little bit more risky. And that's when we start seeing the low 470s on SPY. As long as we could stay under this 105 area, I think maybe we could have like a little bit more of an extended rally. But if we just go to 105.30 again tomorrow, then oh boy, we're probably screwed. And we're probably going to see low 470s or 370s on SPY again right away. So that basically concludes my analysis, you guys. I hope you guys enjoyed it. And definitely stay safe tomorrow. I would keep any kind of trading very, very light if we do fill those gaps. And definitely wait to see a direction after if we get those gap fills, because it could be a very sharp direction to the downside or a very sharp direction to the upside if we do break above it. And last thing I want to say, I know I said I was going to leave, but last thing I want to say is on SPY, if we close this gap right here and we end the week above this gap area, I do believe that that's a little bit more of a bullish sign. If we close this gap area and we close below it on the week, I think that's more of a bearish sign. And we'll cover that again when we get there. But Thanks for sticking with me, you guys, and I hope you guys enjoyed this video.